Hello traders, today is the 24th of June. My name is Neville Hornsey. I'm a market analyst for trading, and today I'll be doing a quick review of the markets. Okay, starting with YouTrading.com for its heat map, we can see that the Swiss franc is currently the strongest currency pair, closely followed by the New Zealand dollar and the pound. The yen had been strong this morning, but it's flipped to being the weakest currency pair. So we are seeing flows out of the safe haven. We also see flows out of the US dollar. So if the Swiss franc was to return to being red, then that would be a clearer sign that there's more of a risk on day to day. We are seeing the bottom left hand corner turning green, top right hand corner turning red. So we are expecting to see equities and commodities rising into the US session. Looking at the economic calendar, we had a flip, like I said, in the yen after the German IFO business and current conditions. We saw that the current conditions for June came in better than expected at 99.3, but more positive was the fact that they revised up the previous reading to 99.6 from 99.5. Later on, we do have some central bankers speaking. So we've got EU ECB's Lacoste speaking, and then we've got US Fed's Bullard, Bank of England's Pill, and then sort of bookending the week with US Fed's Daily. But hopefully by the time Daily speaks, we've closed out all of our positions ready for the weekend. We do have US new home sales coming in at 3 p.m. Obviously, with the rising rates, mortgage rates have been going up. We are seeing worse than expected home data coming out of the US. So we are expecting a slight dip in the new home sales today. So if we were to actually see a bullish revision or maybe a better than expected print, then we could possibly see a stronger US dollar reversing what we're seeing at the moment. But if we see the dollar weakening and the yen weakening, we are also expecting to see that these yields could maybe flip. We have been seeing that since the 15th of June, when the Fed raised rates by 75 basis points. We have seen that this US yield, 10-year yield, the benchmark yields have been coming lower. That's because traders and investors have been moving into the safe havens of fixed income, thinking that these higher rates and potentially increasing higher rates, especially after what Chair Powell was saying when he was talking about nothing's off the table. 100 basis point rate hikes, could be coming. He's not going to sort of say no to that. It's all data dependent, obviously, but recession fears have been growing. Fixed income, bonds and notes, etc., being bid, and we've been seeing the yields coming lower. Today, though, they think maybe that's kind of run its course, so maybe we see a flip higher in the yields. But like I said, it's all about the yen and the dollar today, which way that's going to go. Going to the active trader platform. Like I said, dollar's coming lower. Pound versus US dollar held Friday's close yesterday, so that's the 23rd of June. So yesterday at the London close, that held Friday's close. Then we sort of rose slightly higher throughout the Asia Pac session, and then we just sort of saw a bit of a pump at the London Open today. Going to the dollar versus the yen, 80% of traders are trying to short this. So I did sort of mention that we're looking to go and see if we can get higher, see if we can squeeze the short positions out of their position, see if we can take this higher. We're looking now to sort of see that last Friday's close, I'd sort of marked as something significant. We dipped below it yesterday, came back up to test it in the Asia Pac session, came back down, didn't take out the swing low from 23rd of June yesterday. Got back above Friday's close. Now looking to see if we can get back above this 200 period moving average, back above this swing high. See if we can get through what was support, now resistance. If we can get through the 135 sort of level and start taking these little swing highs here as we make our way hopefully back up towards Tuesday's high. Pound yen. See, we actually pushed up a lot higher. This morning, I did sort of mention that because Friday's close had held, we tested it 3 times essentially, and then we broke out of this consolidation. I'm just looking for a retest and then continuation higher. Looking to the left, we haven't taken out this swing high from the 23rd of June. If we do, then we're starting to look to the 166.5 and then this swing high here at 167.5. Looking at Brent. Now, Brent, if on a daily chart, if we just go to the daily chart, is obviously fallen quite dramatically from 8th of June. So we had the spike high in 8th of June, swing high there. 14th of June, 15th of June, as we're around the FOMC sort of times. Then we had 17th of June last Friday. So the last week, we've seen a big drop. They're still trading within the range from Wednesday, 22nd. We are obviously balancing along this rising trend line, which has been tested several times. So break below that to see if we can head down towards the $96 per barrel sort of level. This 200 period moving average is likely, but we need to break lower than yesterday's low and obviously Wednesday's low. I have got the 111 spot 59 as potential resistance level, which is the low from the 21st of June. So just looking to see if we stay with capped by that price. Looking at the USA 500, which is the S&P 500, we are starting to make more bullish sort of moves. Yesterday, the close was bullish. The end of the US session ended green. Looking to the left, if we can get back above the 15th of June high, 3839 spot 65, then we can start to fill this gap. And then we've got this really sort of impulsive move to the downside. Just the balance area is up here at 4,100 and up to 4,200. So we're looking to see if we can get back above this gap and then see if we can test 4,104 to 4,105. If we do that, then depending on the fundamentals, maybe we are moving out of the fixed income. Maybe we can basically rise above the swing high and start taking out these swing highs. But just waiting to see what happens now. We are in a descending channel. I do think channels generally break to the opposite side of their sort of travel. So looking to get back above the swing high and then break out of the larger channel. UK 100, obviously that's the FTSE 100. Again, the UK and European bourses are essentially following the US higher. So we're looking to see if the UK can get back above this swing high from 21st of June. It does go straight into this balance area, which acts as resistance. So, ideally, before we can really get bullish, we need to get back above the 7,200, get back above the 7,300, and then see if we can push up to the 7,500. So at the moment, I'd like to think that the equities have been beaten down by recession fears and, everyone's been trapped in this narrative. But obviously, whilst we're waiting to see, what actually happens with the next quarter's GDP, maybe we are going to go lower and we're just pausing in this sort of consolidation at the moment. But today, looking bullish. And as long as that yen and the dollar keep weakening, then hopefully we can start to see, more of these equities go higher. All right, looking at the euro versus US dollar, it's been trading within the range from 16th of June. Obviously, if it goes higher, then the US dollar index comes lower. If it goes lower, then the US dollar index goes higher. So kind of just waiting to see if we can actually do anything with this euro versus US dollar. Today is kind of more bullish because at least we're green for the time being. Looking on a smaller chart, it's just a big mess. Like I said, whilst we're between 1.06 and 1.038, this is a tricky market. And if we're kind of just waiting on everyone to sort of make a decision, really. So at the moment, nothing to do on the euro versus US dollar, but we're going to keep an eye on it because it does kind of lead the dollar index. Another risk on, risk off is the Aussie yen. If we go to a daily chart just to sort of see where we are, obviously the yen crosses have been going higher for quite a period of time. We have pulled back. I did say we were going to pull back towards the 91 sort of level. We came back down to the 91.9. So there's still a bit of a gap between this breakout level of 91 to that low from the 16th of June. If we find that there is resistance at the low of the 22nd of June, perhaps we roll over next week and come back down and test that. Some traders are probably looking at this current price action as a bull flag. So if this was the pole, this is the flag. So if we get a breakout to the upside, we're going to look for something like this. So if you are bullish, just because of the long-term trend, ideally for the strategy that I've been trying to trade, but obviously we haven't had many signals, is that we get a lower close below the Bollinger Band, lower bound here. then we get a move back up above the 9-period moving average. So like this sort of price action where we close below, get back above, and then carry on in the momentum to the upside. So I am actually hoping that we do get that at some point. Maybe we go sideways and close lower, after consolidating over time. But yeah, it'd be good to actually get another trade in soon. So that's what I'm looking at the moment. Slightly risk on day today. It's flipped once already. It can flip again once we get that home sales data from the US and potentially after Fed Willard's speech. Right, good luck. If you have made money, obviously try and keep it today. It's Friday. Go into the weekend happy, and I'll catch you again on Monday.